What's up guys, it's Flash with tradingwithflash.com. In this video I'm going to go over some risk to reward strategies and I'm going to break down some charts on what it exactly looks like when you're trading your risk to reward, so stay tuned. Okay guys, this is a risk to reward ratio. It's important you stick to it. It's important you stick to your plan when you're trading. And I'm just going to show you what a risk to reward ratio would look like and a trading plan. So I show you all the support and resistances by looking at this trade. First of all, I want you to have a look at, if you do have some trading experience, a little bit of knowledge, where is a good point here. Let's ignore this half of the trade. Let's pretend this bit of the day did not happen. So we're just looking at it from here. This is where we're looking at it here. So what we would be looking at here is, you can see 6 is a clear support. Now please ignore all this half of the section. I don't know how to remove it, but we just have to work with what we have. So just ignore. Let me just do the line. Where I want you to ignore from. Ignore this side of that line. None of this happened just yet. So you can see a clear resistance there at 6. Now what we like about this trading plan is if it's building up like this pre-market, it's looking super tasty. It's holding this pre-market, which these are some setups I like to see. So this is quite a straightforward play. What you'd be looking at here, if I was playing this, I'd be looking at a low flow momentum stock. If it wasn't, it's still a very nice setup. It's flagging out at the 6. It's being rejected and it's holding under it, which is usually a good indication that if it gets volume here, this might go through. So your risk to reward ratio, depending on your trading style, but if this was me playing this exact stock, other people would play this different. I would give this 10 cents. So I'd give this 590 would be my hard stop on it. And I would enter above the break of 6. So my entry would be exactly on this line. 601 would be the break. Now other people would say I would get out if as soon as it fell back through 6. That would be their plan, and that's fine. I don't like to do that because a lot of the times it does fall back through a couple of cents. It does have a slight pullback through it. Now what you're looking for, if it does come down and tap it like it did here for the break, it's confirming it, but we'll talk about that in just a second. So my hard stop would be 10 cents. I would have an initial plan. I would like to see 20 cents out of it. So already I'm at a 2-to-1 ratio. So my entry above the break, my stop, and my price target initially would be 620. So therefore I'm looking for 20 cents and I'm risking 10 cents. So no matter how many trades I take, I'm always going to be in profit. Now bear in mind, it doesn't always work out like this, solely because some people will break the rules, including myself, and you'll mess up every now and again. But it's important you try and minimize that and just stick to your plan. So let's get in at the break of 6. We got in at the break of 6. Now the first initial opening candle, so we'll just move this out of your way now because we don't need that anymore. So we're in the trade. So first initial candle struck off 6. You actually would have been filled straight away at your initial price. Job well done. Now it did come back down to test that. So that's usually confirmation that it's testing the 6. It's quite a strong support. Now where you would have missed the bulk of the move, you could have took all your money here and stick to your plan at 620, or you could have sold half and held on to half of them. So if you had 1,000 shares, you release 500 at your first price target. Now this pulled back through and this hit a low as 96. Now this is what I mean by when I say a lot of people would have a hard stop just below the 6. Now that can work out and it can't work out, and so can this tactic. It can and it can't, but that's why I don't like doing it. In this case you would have been stopped out, although you would have covered 500 shares here at 620. You would have been in the green, which is great. You would have got stopped out here, either at a break even or you would have lost a cent or two on it. You'd still be up on the trade, but like me, if you were sticking to your hard 10 cent stop, you would have been in the trade for the move to the upside. If that does happen, to the move to the upside, you want to see a breakthrough of the above candle that it set that high. You want to see it break a new high, which it did, and we got a huge move there. We got really near to 665, so we even smashed through the 650 mark without any hassle at all. Now that I would have been looking for my second price target, it would have been preferably 650. If I seen we were struggling here, I potentially would have took it on the struggle here, but it would all depend off reading the volume as well. So let me give you a quick look at the volume too, which the volume was piling in. So in that sense, reading off the volume alone, my next price target would have been 650. I would have covered the remainder 500 shares at 650, and as it broke through over the 620, I would have removed my stop completely out of the game, or I would have removed it to break even, or I would have put a trailing stop on it. But realistically, it's moving so fast, I would have just removed it from, I would have removed the hard stop altogether from my montage, and I would have been getting ready to use my hotkeys to get out either at the first struggle here or the second price target I would have had set for 650. Over and all, it would have been a huge gain. So I just wanted to show you what it looked like to set a risk to reward ratio. Now some people will have kind of silly ones set. So some people will say, okay, I want to set a 10-cent stop. Alright. And I want to go for a 50-cent gain. That's a 5-to-1 ratio. It's a bit unrealistic. But it would work if you said, okay, well, do you know what? I'll tell you what, I'll cover half here. I'll cover half at 25 and half at 50. It's still a far-fetched one, but it sounds better going for a 2.5-to-1 ratio than a 5-to-1 ratio. If it's all working out good and well, stick in the trade, see how it goes, but it's always good to at least get used to entering and exiting on your plan. That way you can get used to it, and then when you eventually become a lot more experienced by reading the volume bars and all the other indicators, then you can decide, okay, I'm at the break-in my first price target, the volume's still piling in, the level 2s look great and the time of sales look great, I'm going to hold on to this for until I see it die down a little bit. Now that can backfire on you too, because you can just get an immediate red candle and all of a sudden you're in the shit. But when you become a bit more advanced, there are some of the techniques you can play with. But as a beginner, I would just set your rules in, okay, I'm risking 10 cents, I'm going for 20 cents. When it hits 20, I'll either sell the whole thing or I'll sell half. And just kind of keep doing that over and over again until you become really familiar and you bait that trading strategy and your risk to reward into your head. Because if you do have a losing set of streaks and you've stuck to your 2-to-1 ratio 9 times out of 10, you've stuck to it, and all of a sudden you have 10 wins sticking to this ratio and you have 6 losses for the next week, you're still in profit because you stuck to your plan of your 2-to-1 ratio. So I just wanted to kind of break it down what a 2-to-1 ratio looks like. Again, you can set your own and see how you guys get on with it. So if you have any questions, please shoot them to me. I hope you enjoyed the video.
So guys, I really hope you enjoyed this video. If you haven't already, please hit that like and subscribe. And once again, I want to thank you all for your support so much. If anybody needs help, please put it in the comments below. If you have any questions or you need help in certain areas, I'm more than happy to help anyone who reaches out to me. Once again, guys, thank you so much for your support and God bless. So guys, I hope you enjoyed the video. There is a link in the description below. I've prepared a full module of everything you need to know how to get started in the stock world from A to Z, all the way from what platforms to use to affordable education. And I go into huge detail about candles. Check that link, guys. I hope you all enjoy.